The House Republicans have a tax reform plan on the table. It's called a blueprint. It has 4 things in it that Farm Bureau likes. First of all, it lowers income tax rates. Second of all, it lowers capital gains tax rates. Third, it repeals estate taxes. And fourth, it provides for immediate expensing. This means that farmers won't have to depreciate their inputs anymore. They'll be able to deduct them completely, entirely, the whole thing, in the year they make the purchase. The blueprint has one problem for farmers and ranchers. It takes away the deduction for interest expense. Farming is 95% debt financed. It's the way farmers get money to buy land, to buy equipment, to get input supplies. If there is no deduction for interest, it means that the cost of borrowing money will go up, and that will hurt farmers. There are 3 things that the blueprint's silent on, and we're watching those very closely to make sure that they stay as they are in current law. One is like-kind exchanges. We want farmers to be able to swap their equipment. We don't want that treated as a taxable sale and then a purchase. The second is cash accounting. There's nothing in the blueprint on cash accounting, and we want to make sure that that simple way of keeping books is maintained. And the third is the stepped-up basis. That's provision that applies to estates, and it reduces the capital gains taxes that are paid when assets are sold. A few years ago, Congress increased the estate tax exemption, and that virtually eliminated estate taxes for many farmers, but not all farmers. Farm Bureau believes that there should be no estate taxes. That should go for small farmers and for larger farmers. Estate taxes make farmers spend money for attorneys and insurance to plan for the estate tax, just in case they would go over the exemption level. And it's a cloud hanging over young farmers. They don't know what's going to happen to their farm when their parents die. So getting rid of this estate tax has been a long-time priority for Farm Bureau, and it's one that we think we can finally accomplish this year. The tax code has a huge impact on how easy it is or how hard it can be for a new or beginning farmer to get into business. One of the big acquisitions that a beginning farmer usually makes is in land. And we need a tax code that makes it easier for farmers to get land. The first thing we can do is eliminate the estate tax. The second thing is that we can reduce capital gains taxes. If we reduce capital gains taxes, it means the sale price of land will be lower. And the third thing we can do is make sure that the interest deduction stays in place, because the purchase of farmland usually requires a mortgage, and we want to make that cost as low as possible.